What's going on, you guys? My name is Zach Hartley, and in this video we're going to talk about pre and post market trading. I'm going to walk you through what you need to know in order to place an order, as well as the risks associated with it. Here we go. Alright, so pre and post market trading can also be referred to as extended hours trading or after hours trading, and basically it's the ability for you to place an order and have it execute before or after the regular market opens or closes. Now, there's a couple things you need to know about, and the first one starts with turning on the data. So I personally use Questrade, and to turn on the pre and post market trading data, all you have to do is right click on a chart, you click on the settings from the drop down menu, and then you get this little window that appears, and there's a little box here that says show pre-market and post-market trading. And when you click on that, what it's going to do is it's going to give you all of the data and all of the candles for the pre and post-market sessions before and after the regular day. And so that's going to open it up for you to do the analysis and actually decide what trades you're going to take based on the pre and post-market action. Now, the hours of trading depend on the type of security that you're trading. So on Questrade, the Canadian securities do not have a pre-market session. It just doesn't exist. You can only trade them when the market opens. However, Canadian securities do have a post-market session that closes at 5 p.m. US securities do have a pre-market session, and it opens at 7:30 a.m., 2 hours before the regular market opens, and it closes, the post-market session closes at 5:30 p.m. So you got about an hour and a half after the regular market. So depending on your broker and the area or the geographic region of your security, that is what is going to dictate the hours that you can actually trade pre or post market. Now, to execute the order on a Canadian security, I use Questrade for all of my trading, and there's 4 things that you need to know. Number 1, it has to be a limit order. So as you can see here, my order type is set to limit. It has to be set to auto as the ECN or routing system. So as you can see under route, I have it set to auto. The duration of the trade has to be set as day. So my duration here is set to day, and it has to be in a multiple of 100 unit. So in order to trade in the Canadian post market, you do have to trade in a variety of 100 shares, which can make it difficult, especially if those shares cost a lot. So you need to make sure you're well aware of that before you try and make that trade in the post market for a Canadian security. Now, for a US security, there's a slightly less rules. Number 1, it has to be a limit order, so that's the exact same. And then number 2, for your ECN and your routing system, it has to be set to ARCA. So right here I have my route set to ARCA, and then for my duration, it has to be set to good till extended market. So that's what GTEM stands here, and that's what's basically going to keep your order alive in the post market. So if you were to place this order here post market on Apple stock, this one would execute and you'd be all set. So kind of interesting. You need to make sure that you understand your broker first of all, and then you understand how to place these orders, because it is different than placing a regular order. Now, if you guys are looking for a new investment platform, I highly recommend Questrade. I personally use it for all of my trading and investing, and there's a link down in the description for $50 in free commissions. So you can use it, you can make a couple of trades, and you can try it out completely free for your first little while. If you're interested in that, definitely check out the link. Now, there are a couple of risks to extended hour tradings. Number 1 being low liquidity. Most people trade during regular hours, and that means that there's fewer people trading before and after the market, and that means that there's lower liquidity and possibly larger spreads. The spread is the difference between the bid and the ask, and when that gap is larger, it means that it's harder to get filled at your specific price and the price that you actually want to get filled at. And so that can increase the volatility, that can decrease your profit, and it can increase the basically risk associated with trading pre or post market. The other thing that you need to be aware of is that it's a lot of institutional investors that will listen to the news or read the news or the earnings or whatever comes out from a company and then make a decision based on that news. And so they're trading with a lot of money, and if your company that you're looking at has a lot of news or earnings or anything planned for that day, you need to be very careful, because it can be very, very volatile. Now, there are specific advantages and reasons why people trade pre and post market. Number 1 being more control over your positions. If you know how to trade pre-market and post-market, and you find out news, or you change your mind on your position, or you want to get out of that position and maybe the market is already closed, this gives you more control over that position to be able to get out of it or trim the position, or at least be able to know that you can do that. And so being able to trade pre and post market just gives you more control over your portfolio. The next thing is news. Most of these companies release their earnings or their press releases before or after the market, but usually during pre or post market trading. And so if you are actively trading during those times, you can actually trade on the news. So if a company blows its earnings out of the water, you can analyze that report, you can realize that and get in before the market opens the next morning, and maybe you have an advantage there. The next thing is if something happens over the weekend. If Boeing plane crashes on Saturday, you can make your decision on Monday morning in the pre-market on what you would like to do with that stock. So there's lots of different options there, and it basically gives you more control over what you decide to do. Now, if you're interested in learning more about this, you should definitely consider signing up for my stock market course. It is completely free when you sign up for a 2-week free trial on Skillshare. After that, it's about $20 per month, but there's a 9-hour course on there that walks you through every step of the way in your stock market journey. And if you can do the entire course in under 2 weeks, you get the whole thing for free. There's over 1,300 students hosted on Skillshare. There's a link down below, and I promise you, it will be the best free resource that you can find. Now, in summary, you may want to learn how to trade pre and post market because it gives you more control over your portfolio. It allows you to enter and exit before the big crowds, and it allows you to basically make those decisions and have more control about what you want to do with your own trading, even if the market is closed. It can also help you get out before other traders in case something bad happens. And so it basically is another tool in your tool belt that you can add so that you can improve your trading and hopefully your overall returns. And if you guys get any value out of this video, the only thing that I ask is that you like the video and you subscribe to the channel. I sincerely appreciate it. Good luck investing, good luck trading, and we'll see you in the next video. Peace.